Hey guys, thank you for stopping by at Building Wealth with Rajiv. Most of the time, retail investors end up looking at big names like Nvidia, Microsoft, or Teslas of the world. But stock market does offer some great opportunities with lesser known names. I talked with Joe on two such names, Axon and Reddit. Joe has made significant profits in these investments. I hope you enjoy the discussion and you find some new ideas for your future investments. For such meaningful conversations, please do follow my channel. We talk about two of your biggest holdings here, Axon and Reddit, on this
Mhm.
chat. And I want to start with Axon first. And how long have you been in this stock?
Good question. A couple years. I'll look it up here as actually as we're kind of talking. But I first got into Axon in August of 2023, so I'm coming up on 2 years of a holding. Did kind of got in small and fortunate, picked a good company that has continued to earn a place in our portfolio, and it's now up to a 12% position or so, I believe. And yeah, 11.4 is where it is right now, and just really has earned its way there. It's gotten bigger because the company has executed rather than us throwing additional capital at it. So really pleased with how it's done. I know you followed along, but I know for listeners that might be new, like for me, I like every 3 months we get an update on their business performance, and I always try and run it through. Do I own the best 10 or 12 companies that I can possibly own? And Axon's done a really nice job of really doing what they say and doing what they promise that they're going to do, and really lining up some strong business execution. And it's grown now to be again one of our top two positions in the portfolio.
So what was your kind of, purchase price? About 200 or something, that was your purchase price?
Yeah, I would say our cost basis is probably around 250 or so. The stock has been as high as 880. I think one of the things that's in trying to manage our portfolio, I have taken a little bit off the table, trimmed a little bit. I've been a net seller of Axon this year, not because of the quality of the company, but just because the allocation's gotten so big. At one point it had gotten to 14 or 15% of our portfolio, and I wanted to take a little bit off the table. I wanted to keep it kind of 10 to 12.
Okay.
That's where it is right now. And right now, again, I have a really good company that I believe in that's executing well, and their roadmap for the foreseeable future, at least the next year to two that we have
But
kind of
in
insight into, looks like they're in a really good spot.
but initially, what did you like about the company at a price of 200? What was your thesis investment? Because I know you think really hard about your thesis.
Yeah, just really execution. I think every company that we look at is a mix of, revenue growth, gross margins, and then cash flow, and then profit margin. And in this particular case, Axon met all four of those. They were growing above 30%. They were a profitable company. They had really, really strong cash flows. They had a really strong product in their original product is Taser.
Mhm.
It's kind of the stun gun that law enforcement officers use both here in the U.S. and a little bit internationally, but it keeps them from using bullets. It's they try and sell it as being safer. It still allows the officer to subdue someone that they're a suspect, but at the same time does it in a less lethal way. Although it's not painless, but it's a less lethal way. And they had a really strong success with the Taser product, which was their core product. And I think what interested in me was when we think about companies that have been successful, a lot of them are able to build out adjacent products once they have something that's successful. And for them, where they pivoted to was evidence collection and digital evidence, body cameras. They've now gone into AI software that helps write police reports. They have made a couple acquisitions of drone companies that allow them to, a lot of municipalities, cities in the US are now allowing police to use drones to go to a crime scene or where there's a call site first to be able to go and get video as the officers are on the way, so they have a better idea of what they're getting into. So really just have branched out into a way where they've layered on these other products that have really they've had success. It's made it a stickier product. It's allowed them to get bigger contracts from the municipalities that they use. And for those that might be familiar, obviously in the US, you're at the mercy of municipal budgets. They have to have the budget money to do this. But even though they go in municipal budgets, the cities are getting enough of a return where most of them are just like a software company. They're actually expanding their spend with Axon. The last quarter, the net revenue retention was 124%, which means that most of returning customers are spending 24% more money on their renewal contracts than on their originals. So it's really been proof of concept with the products that they're doing. They have an expanding product line and are in areas where it looks like they'll have durable growth for a while, quite a while, as they go. And for me, it just makes it such a fundamentally strong company. And they have constantly, from a management perspective, delivered on what they've promised. And for me, those are companies that are fairly easy to hold. It's just checking in every 3 months to make sure that the story, the narrative behind the company and the numbers are still intact. And if they are, it just continues to hold a big spot in our portfolio.
But doesn't it bother you that US is the key market and within US is the government, which is their core market, which is biggest strength, I would say, but at the same time,
Yeah,
a bit lopsided too.
yeah, no, that's very fair, and they've done some things internationally, but I think what we've seen is that um, they've expanded. They've done federal agencies, federal law enforcement agencies. They've done state law enforcement agencies, which are still huge customers for them. They've also branched in the private security, retail security, security guards that might be at Walmart, wearing a camera that at least records video. They branched into some products that watch parking lots, so they have video capabilities for monitoring parking lots for crime that might happen there, or for security purposes to kind of record there. And really, what they've done is they've transitioned from the hardware of uh, the tasers and the drones that they have and those body cameras, and that's the lower margin business. But then that collection of monitoring, collecting evidence, keeping it digitally, storing all that, that's where they're seeing that influx of increased revenue. And especially for law enforcement, it's allowing them to do a better job of allowing them to keep records and to make sure that they maintain their evidence in a way that holds up to not only public scrutiny, but holds up to legal scrutiny as well, because some of that is being used in legal cases. So yes, there's a little bit of very US centric, but at the same time, with what they've layered on, it really has been a value add. They're talking right now with the number one product they've done is it's called Draft One. It helps to transcribe the video that law enforcement video collects, or the cameras collect, and it turns it into a police report that the officer has to go, and there's all kind of checkpoints that make sure that there's legitimacy behind it. And it's saved hours of administrative time from police officers and law enforcement officials, and allowed them to do more work out into the field instead of doing the admin in the office, and still holding and maintaining the standards of that administrative output to make sure that it still has legal standing and can still be used for the checkpoints it needs to be used for. So they've just done a really nice job of building adjacent value add products onto their core offering that's originally positioned them into the size that they are now.
And what is your, I know like you've watched the quarterly earnings very closely, and if two consecutive quarters last time we talked, possibly you probably can be forgiving for a quarter, but two bad quarters, and I think your patience goes off.
Mhm.
What are the risks do you see with the company? Do you see any particular risks? Are you kind of a watch
Yeah,
out?
I don't know if there's political risk per se, because policing or protecting the community is a core of any community, really, I guess the world over. And those budgets are probably less discretionary than some others. You need to protect your communities, you need to monitor your communities, you need to serve your communities for the police officials that do that. So there's a stability. If we're in a time where people are cutting back expenses, that's an expense that's going to be cut later rather than sooner. It's less discretionary. It's just more of a core of what people are doing. And again, when they're um, return on investment when they talk to potential customers is we can save office time to allow your officers to be out in the communities more and out in the field more. That's a really big selling point for maintaining budgets to allow so that now you can spend more time out in servicing the communities with the same number of officers. So in a way, there's almost a cost effectiveness to it that allows them to not only maintain and continue sales, but actually, as the net retention rate that I mentioned before shows, getting them to spend even more money. So it's like, hey, I can spend this extra money to be able to save all this time on reports and not have to hire 5 extra officers because I can get the same, man or woman hours out in the field, having them be out in the communities.
Yeah. No, I think one thing I can't get I was looking like when before this interview, I was trying to prepare something and looking
Mhm.
US being the key market, but I think they have gone into some of the European markets. A friend of mine was robbed in UK. Unfortunately, he is Singapore based as well, and he got a police report done. And then when he got the police report, everything back, it was all Axon. So
Mhm.
it was the software or wherever it was written, it was showing Axon, and he told me that. So I was in a way, I was kind of, oh yeah, it's a company I own, but obviously it was a sad event. I think they're making some inroads in India also, which I've seen. But the international expansion and getting government contracts in other countries is not so easy.
Right. No, it's not easy, but it is an area, especially because the base off a taser is not it doesn't use bullets. So it's less fatal. And I don't want to make it like it's not like it's safe, but it's something that law enforcement officers use in the field when the situation calls for it. But coming off of that with the evidence and the information, I think that's where
Hmm.
Axon's making the most roads because every country has some sort of legal system where you need to present evidence. And I know, like you mentioned about the police report being Axon, I've heard what the management has said. I've also been very fortunate. I've ran into someone almost coincidentally who I know who's adjacent to the law enforcement space, and has seen how it's called draft one, which is the police report module. And he's seen how it works. And what happens is everything's interconnected. So if you have a body camera, it takes and there's video, the software is able to take the video and put it into these are the events that happened in the same format that a police report would be if an officer was sitting down and writing it by themselves. So it writes, again, it's called draft one. It writes an initial draft of what the police report should look like. And then there's checks and balances that make sure that it stands up to muster if it's used as a piece of evidence in a court. And what happens is I know that the officers have to go in and they have to manually fill out all their information to verify that it is them that is putting the report in. So it doesn't pre-fill any of the officer information. The officer has to go in and manually do that themselves. So they're verifying, yes, I'm the officer logging in and I'm here to run through the report. And then it runs through the report. And what the AI does is it purposely puts in either facts that are incorrect or it puts in sentences that are kind of nonsense in the report. So the police officer almost needs to edit the report and go, oh, you know what? That's not right. It didn't happen at 7 o'clock. It happened at 10 o'clock. So
Hmm.
now the AI puts in kind of these checkpoints and it won't let you approve the report unless you've fixed all the obvious mistakes that are in there. So the officer has to go through and read it with a critical eye to be able to update the report. So once the officer signs off on it and says it's done, those are the checkpoints that Axon puts in, that the software puts in to make sure that you can say, yes, the officer did go through and verify all these facts. So again, it's not complicated. They don't try to trick the officers, but it'll say it happened at, 3 a.m. when in actuality it happened at 4 p.m. And if the officer doesn't change the time because the timestamp is on the video, then the software will not let the officer approve the final report. So again, they've done it in a way where they've worked with their customers in a way where they know that if an officer signs off on a report, it has to stand up to the legal standard that the prosecutor or that the judges can use it as legitimate evidence. So everything ties back. So they really have created a digital evidence platform that's based on being accurate and saving time for the officers on the back end. So it's not just the work out in the field, but it's the back office admin, and that's the next area that really has exploded for them. And I think what that does for municipalities is it can allow them to have the same number of officers and spend more time out in their communities.
Mm.
So from that aspect, it's a cost that's easily justified, and there's an easy return on investment for that to say that they're doing the right things and trying to serve the public.
Yeah. So I think in that sense, I think the individual country adoption is not an issue because the way they're designing the product, but it's the whole hardware and
I think,
software kind of.
yeah. I think that's fair. I think the nuance is making sure that they meet
Mm.
the legal requirements in
Yeah.
each market. So as they've gone out and branched into international, I don't know, you mentioned your friend in the UK. I don't know what the legal standards are for piece of digital for a digital report to be used. But again, I just trust the fact that Axon's going into these markets and they're talking to their customers, and the whole basis of draft one is being able to allow
Mm.
police officers to write reports that stand up to legal muster in a faster, more efficient way that allows them to do the things that they want to do, which is be out in the community. So I trust that management's doing that the right way, and they have had some wins in that regard. And again, I think it's something they've done a really nice job of moving past a straight hardware company that sells one product to coming up with a suite of products that augment each other. And once they get in, it's not just Axon with tasers, but it's Axon with tasers, it's Axons with whatever drones you have, it's Axon with your body camera, it's Axon with your digital evidence storage, whether it be video storage, whether it be writing reports. But they've done a really nice job of being a one-stop shop to help law enforcement and security companies be able to manage all not only their hardware, but also not only their hardware tools, but how they manage and keep their information to make sure that they're doing everything on that end as well.
Yeah, that's nice. But one thing I can't get my head around, Joe, is the valuation, and I think we
Mhm.
discussed about this briefly in the messages also. I
Yeah.
My average price was 400 something. I don't remember. But the moment it went to 700, I sold some. Then it goes to 650, but then it keeps coming back. Then it crossed 700. Then it almost reached 800. So I'm not sure what's going on in the valuation. Look, if we look at the traditional matrices, it looks pretty filthy. I mean, in the sense that it looks very richly priced.
I think it's fair, and that's what I some people are very, very valuation sensitive, and I've adjusted a little bit of it as I've gone along. I'm not as valuation sensitive as most investors. However, what I have done, even with Axon, like whoa, hey, it went from 400 to 800 in a really, really short time. History tells me it's probably going to pull back at some point. So that's why I've been a net seller. And I've been very fortunate. I trimmed it, 800 at one point. And I was like, hey, you know what? If I could get those back 10% cheaper, I'll take them. So when I sold the shares at 800, I put in a small order to rebuy some at 720, which is a 10% discount. Well, I got the shares back at 720, and now I took the same number of shares into the earnings report. And then when it popped at earnings, I trimmed some at 850 and I was able to buy it back at 760, I think. So I think what I've always tried to do is great companies are always going to have a premium in the market. They
Mm-hmm.
just are.
Yeah.
And we know that stock prices go like this.
Mm-hmm.
But what I've always tried to remember is that if I get the good company, if I look at just the average, that the line's going to go like this. And if I believe that the stock price is going to go on this, I don't, that stock price is going to go up and to the right on a slope. I don't care if it goes up or down or along the way, as long as I know that in the long term, it's a company that should be worth more in the future than it is today. So if I believe that Axon is going to be worth more 5 years from now than it is today, I'm not as worried about the
Mm-hmm.
fluctuations. What I'm worried about is if it's going to be worth more 5 years from now, it's going to have to meet these milestones along the way. It should look like this 3 months from now, or 6 months from now, or 12 months from now. And I'm more worried about what are those business milestones and does it hit the business milestone? So we all know that you own the company and the stock reflects that. The stock's going to go up and down, but if the companies are doing the right thing, And we've seen it. I mean, I've been doing this long enough. I now have been managing my own portfolio for over 30 years, and it is always about the quality of the companies that you own. And yes, there's the outlier that, I didn't own Snowflake for a long time because at some point the price was just so crazy. Even as
Yeah, yeah.
someone who doesn't pay as much attention to valuation, I didn't want to own Snowflake at
Palantir.
400. So and this is one where Axon's up again, but I'm really fortunate I got in at a good time, and it's a company that's performance has earned the stock price going higher. And I can't control the exact multiple at any given point in time. The market controls that, but I can control the quality of the underlying business, and I've just always been impressed. Axon's one of the best underlying businesses I own from a quality standpoint, and I'm okay having a large amount in it because of that reason.
Yeah, no, I get it. See, your buying price average initially was 200 something, mine was 400 something. But
Hmm.
what about the new investor? That is what sometimes I think. Somebody who, because you can average up, right? And your price anyway will never be 800. It will still be like what, 260 to 300, 300 to 350. So that's a consolation, right? But for somebody just buying at 750 or 800, that's a bit of a tricky situation.
Yeah, the psychology is always harder in that respect. And I'll admit, like even with some of the other companies I have, and these are not ones that we're necessarily talking about, but I've been following Nebius for a while. That's a company that's in the infrastructure AI space, and that had bounced around for quite a bit. And I was, it had gone from the 30s and run into the 50s and then touch the 60s and then back down. And I just knew that at some point I was like, okay, I feel like Nebius is going to have a good quarter coming up. I can't control where it's going to go. I think it's going to go up. I'm going to buy a small amount just to put some on the board.
Okay.
And if it goes up, it goes up. And at least I have a little bit. If I like the quarter and it goes down, I'll add more. And if I don't like the quarter, I'll just sell it. And that's one where it's really hard when markets are at all-time highs sometimes to grab those things. And what I've learned over the years, and again, I can only speak for myself, what I've tried to do is get in with a 1 or 2% position, which is, a small allocation for
Mm.
me. For some people it's big,
Mm.
but whatever your allocation is, I've tried to get in like, I know that sometimes people talk about buy it in thirds. I'm going to buy if I want X percent. I'm going to buy a third of that now, and I'll watch the report, see the information, and if I want to add I can add my second third or my third when I want to, but at least I'll have some, on the board. And it's we try to market time, and the I've always looked at it, do I want to own a company, yes or no? And if the answer is yes, I'd want to get some of it on there because I want to own it, even if it's at an elevated price. And then I will follow as I go. If I get opportunities to add, I'll do that. And if it just continues to run, that's okay too. But at the end of the day, I'm more concerned about, is this one of the best companies that I can have
Okay.
in my
Quality.
portfolio? And
Yeah.
if it is, price is not non-existent, but it's definitely secondary for me.
And you talked about your horizon for 5 years, whether if it does well for 5 years or what it's going to be. So what is your take on it? 5 years. I think the revenues were about two billion right now. 2024 revenue I saw was about 2 billion something.
Right.
Yeah.
I look at it more so I do have the long-term mindset of um, do I believe this is a company that has a chance to continue to be dominant for the next 3 to 5 years?
Okay.
That's the first question. And that's more of a direct, yes, I do believe that, Axon.
Okay.
Okay, if that's the case, what should it look like the next 3 to 5 quarters? So when
Okay.
I track the companies, and I have sheets for all of them, that all the companies that I own, I always look at, what did they guide for? What's their history of beats been? If they're still on track, what should next quarter look like?
Mm-hmm.
So it could be, I'm making it up here, but I might have a company that, okay, they've guided for $100 million and they have a typical beat of 6%. So I would expect at least 106%, $106 million if they're on track. And then, oh, and they normally beat their EBITDA a little bit. So I want a little bit of an EBITDA beat. And and their customer growth has been really good. I want their customer growth to hold. So I almost go, okay, I could see them being a good company 3 to 5 years out, but the reality is I can't predict the future 3 to 5 years out.
Okay.
However, if they're still on that trajectory, I should see this happen next quarter and 3 quarters from now. In fact, so I always think more about that. Yes, I want to own it for the next 3 to 5 years. And then where I'm really going to stress test and hold my companies accountable is if they're going to get there, they should do this the next 3 to 5 quarters, including this upcoming quarter because of what they told us they're going to do if they guide to the next quarter. I want to continue to see them do the things that they normally do. And when they change things and oh, we didn't this happened or we didn't meet this or oh, constant current foreign currency got us. I have a company, and I know I'm kind of going off, but I have a company, Samsara, who all of a sudden is making a big deal about currency conversions. Well, we were $1.5 million higher if it was current. Okay, well that's great, but you're doing $300 million. Like a $1.5 million shouldn't be a big deal because Axon's not making it a big deal, and CrowdStrike's not making it a big deal, and these other companies that Reddit's not making it a big deal. These other companies that I own that have international revenues are not making the currency a big deal. So the fact you are doing that tells me you're trying to hedge a little bit and make your numbers look better. That always kind of is a bit of a yellow flag for me. So if the company does what it says it's supposed to do and the numbers make sense that's the short term. If I like where the long term's going and they're meeting the short term expectations, I'm good. When those short term expectations get out of whack and tell me that it might not be on the right path, that's where I need to determine whether or not it's a company worth continuing to hold in our portfolio.
No, totally get that. But one thing which crosses the mind is, let's say, currently the Exxon is about the market cap about 60 billion, something like that.
Hmm. Hmm.
Now, I'm sure you must have some IRR figure in your mind. And let's say next 5 years, if for a 15% IRR, the company got to be about 120 billion, right? which
Right.
which is doubling 5 years, 72 divided by 5, whatever, the number. So from that point of view, I was thinking that if the revenue doubles in 5 years, then safely you can say, okay, the stock price also doubles if it keeps following. And that's what
Right.
I was thinking, that it's 2 billion today. Could it be a 4 billion company in 5 years? Do you
Right.
think on those lines or you don't?
I don't do it out that far. I just go, I look at more of is the growth durable? Like the one thing is, and I'll take a quick look here. I mean, as far back, I have one, two, let's see, 3, 7, 11. I have 13 quarters worth of past info on
Oh.
Axon. They've been above 30% growth for 13 straight quarters. Like they have such a
Insane.
durable growth level. And
Yeah.
I don't see that slowing anytime soon. And when you see companies that grow, 80%, next quarter it's 70%, next quarter it's 60%, next quarter it's 50%, that falling off that revenue cliff, like that's a concern. But we all know that as companies get larger and you get the law of large numbers, it's hard for them to maintain
Mm.
growth. So I prefer companies that go, 40% growth, 39% growth, 37% growth,
Okay.
36%. That the growth durability is there. I expect the numbers to drift down, but I want them to drift down rather than fall off a cliff. And
Okay.
in Axon's case, the numbers, it's not that they're drifting down, it's that they are actually holding steady. Um, the last quarter, in quarter one, they grew 31%. In quarter two, they grew 32.8%. So they're actually accelerating a little bit. And again, that shows that they have their core taser, which is kind of maybe growing like this, but then they're adding on all these other things that are adding real revenue.
Hmm.
When you figure that they're doing, they're planning to do $2.7 billion this year. So it's not as if it's a small company. It's a big company that's at
Good point.
scale. They're doing
Yeah.
a really nice job of holding revenue. And as they keep building leverage and their gross margins and everything else, like it's just a really strong combination. Again, going back of revenue growth, gross margins, cash flow, and then profits. They're hitting all those checkpoints in a way that combination is really strong. It's really durable. And as long as each quarter shows me that that's still intact, I have no reason to exit the company.
Yeah, because I was just thinking while we're talking that if they grow at 30%,
Hmm.
another 2.5 years, like 72 divided by 30, 30, 60, like this, 2.5 years, the company will double. It doesn't need to wait for 5 years because if it grows 30% compound. But that's
Exactly.
yeah, that's pretty impressive stuff what they have done. And they have a lot of
And
repeatable.
I'll stop. I'll add one thing there. If you get an Apple or a Microsoft or something that just stays in your portfolio long, that's great. I have to understand the game I'm playing. Some people buy in their long-term buy and hold. I have a that 3 to 5 year mindset, and then I am verifying as I go. And if it doesn't verify, I'm asking if there's another company that's out there. And when I think about my portfolio, the company I've owned the longest is actually CrowdStrike. And CrowdStrike, I bought actually the day of IPO, which was June of 2019. So I've owned it it's been in my portfolio at different allocations, but it's been in our portfolio for 6 years. That's our longest holding. And I have some other ones that have been a year or two or things like that. But companies will be in our portfolio. Like I had Datadog in our portfolio for about 4.5 years, I think, maybe 5. And then at some point, I didn't think it was one of the best 10 or 12 companies we could own, so I sold it. So again, I want to try and I have some people pay a long-term game. I feel like mine is more of like a medium-term
Yeah, yeah,
game.
yeah, yeah, yeah.
I'm happy to hold a company as long as it's one of the best performers, but I don't own 50 companies. I own
Sequentially,
10,
it has to do
12.
well for you.
Yeah, it works for me. And it's about the amount of time that you can spend the track and how you want to try and do it. And I know these companies well enough to know if it hits these 4 or 5 checkpoints, everything's fine. And now when you first own a company, you got a lot of checkpoints until you figure out the right 4 or 5. But it's something that it works for me. Everybody has to find their own idea, but I do feel like the one of the things I like about calls like this or notes or message boards is everybody has a different style to run companies through. But if you make the discussion about how are you assessing these companies and how are they fitting in for you, that's really where and I think that's one of the things that makes me feel good. Like you mentioned Gaucho Chris, and I know you've talked with Bear before and you and when when people with slightly different philosophies, except
Mm,
wanting to build their portfolios,
mm,
that's a shared one. We want to build our portfolios. When people with different company philosophies tend
mm,
to coalesce around the same companies, I
mm.
know that that's a quality company to consider because I know that I might have some advantages amongst those others in the way I think about it. I also know I have a lot of blind spots that those people can help me fill in.
Mm.
So when you can coalesce around, the 3 or 4 companies that everyone seems to like and everyone seems to own, there's comfort in that from a
Yeah.
crowdsourcing standpoint when you find people that you trust.
Yeah, but I'm sure you're not a Tesla investor. You can't be a Tesla investor because you're going to look every
No, no.
that guy will drive you. That guy will drive you crazy. I can tell you that.
And I think what happens for me is I understand the car business and they don't advertise. So they have a huge advantage from a margin standpoint in their auto business. But I also know that a lot of it is on speculation of the robotics
Yeah.
and some of the
Yeah.
other things that they're doing. And
The story. There's a lot of
Elon
story
Musk
in
is
that.
a wild card. It just never fit for me. And I have people that I 100% implicitly trust as investors. They really know what they're doing. I totally value their opinion and they've chosen to own Tesla, and that's okay.
Yeah.
The beauty of investing is it's not a zero-sum game. We can win together, and for me, it's about the exchange of information and the exchange of ideas, and then what anyone decides to do with their portfolio, that's entirely up to them. And what we do with I'm more worried about what we do with our portfolio. I understand the case for owning Tesla, and for those who own it, a lot of people have made it's been a very successful
Yeah.
investment for them.
Yeah.
I've just never been able to wrap my head around that being the type of company that I want to own and that I feel I can track because there's so many variables, just too many variables. And when you're in a market, there's whatever, 5,000 companies or something that you can own. I'm okay walking past one to go find one that I like better.
You know, the moment, just a slight anecdote here, because you talk to Gauko very often, and he's quite secretive for us, but we look up to him.
Hmm.
He owned Tesla. I raised my left eyebrow. He owned Tesla a year and a half ago, and in my heart, I could tell that he's going to sell it soon, and he did because
And
that's
and
the
you know what? I think and I'll give because I know again I think we are fooling ourselves as investors if we think we're going to hold a company forever.
Hmm.
Um, like maybe that works out with Berkshire, maybe that Berkshire Hathaway, maybe that owns Microsoft or Apple. I know people have owned them for years and years and
Hmm.
years. I don't know that you can do that with a small company. Like I own CrowdStrike. I don't think I'm going to own CrowdStrike forever because at some point there's going to be a different security protocol or something else is going to come up or there's going to be some sort of thing that disrupts it. So Could I own it for 30 years? Sure, I could own it for 30 years. I've already owned it for 6, but I'm checking along the way. I'm not just sitting here and going, oh, I'm going to sit back. I'm going to own it for, I'm going to own it for 30 years. And I think sometimes it's a bit of a fallacy where we hear people, I've owned Apple for, 15 years, or I've owned Microsoft for 15 years. And it's like, okay, what else have you owned? Because those companies are the exception rather than the rule. I believe, trust and verify. I trust all the companies that I own but I'm verifying them every quarter, every 2 quarters. And to your point earlier, if they have a bad quarter, I might give them a reprieve. They have 2 in a row, I'm out.
Yeah.
And there's one I'll give an example. One of them, um, I owned a company called Sezzle, which I owned a small position. It's a fintech company. They do payments, and
Mm.
they had a track record. They doubled their revenue, guide for the year, and they had crazy good numbers. I owned them. The first report that came out was they missed by like $20 million, and then came up with all the reasons. And at some point, the numbers just didn't make sense. I was like, hey, I'm out. I held it for one earnings report. I gave them a check. I really liked the numbers. They hit all the checkpoints of what I looked for. The second they didn't hit the check, not that they missed they missed, like I couldn't figure out what was going on. And when I couldn't figure out what was going on, I put it in the too hard pile. I just exit. So again, I have the ability to do that because I've learned over the years when I don't like a quarter and I find a reason to hold on to it, I usually lose money, and I want to stop doing that. So yeah, it is individual to individual investors, but I've learned I've had as few as 8 companies in our portfolio, and I think right now I have around 13, but and at 13 feels like too many. I just happen to own a couple companies that are larger, Amazon and bigger, Axon, and companies that I know really well that are larger, that they're not hard to track. But if I owned a lot of smaller caps, I probably would get rid of a few because there's only so many hours in the day to be able to track the companies.
I saw your comment on says says you owned, right?
Yep.
The earnings you said meh, it's not like it's a pretty pathetic earning. You were disappointed with the earning of hymns
Yeah,
and
when
says.
when you have a lot of people that have followed a company and you look at their history and you're like, hey, with the way, because it's all about trends, it's all about maintaining the trend of business success that a company has established. And so any company needs to stay on trend.
Mm.
And in their particular case, they had established a trend the last 4 to 6 quarters and gave us a guide that suggested most, if not all, of that trend was going to continue, and the trend plummeted. They had done $100 million in revenue, and the trend would have had them probably in the 110 to 115 range, which a lot of people that were
Mm.
coming at it from different angles thought it would be that way. And I want to say they came in at like maybe 96 million or 98 million. So they didn't just miss by like 2 million. Like they actually had a sequential decline from quarter 1 to quarter 2, which was not their MO. That's not what they had done any of their, they didn't do it last year. They didn't do it the year before. So now you're looking at it and go, whoa, wait a second. Like this isn't even like a seasonal trend that you're seeing. They didn't tell us anything. This seemed to blindside everybody. And for me, as soon as I saw the numbers, I'm like, okay, I'm out. And I got rid of it. And then as people stuck around and listened to the call, like even management didn't give very good explanations that people are like, oh yeah, I'm buying that. It makes sense. And so again, just um I want to own the companies, but at the end of the day, they work for my family. And if management's not doing what they say, then I don't have to stay
Okay.
attached to them anymore. I'll go find another management team.
But one thing which is great, I think we'll move into second company, which I want to discuss for some time. One thing which I really liked about you and which I envy is that you can look at the company so clinically, and you can look at them with so much of precision and least emotions. So that is something really great about you.
No,
Anyway,
I appreciate that. And I think one of the things is they tell us what they're going to do. They give us guides and numbers. They make comments, and I always read the transcript or listen to the call. They tell us they're going to do something. And we build trust even in our friends. We trust the friends that
yeah.
do what they say they're going to do. And it's no different with the companies. I don't have any ties to them other than if they do what they say they're going to do, I'm happy to be affiliated with them. If they're somebody that over promises and under delivers, I don't have to hang out with them. I can just go hang out with someone else.
No, I get it. So I think, as you said, that some of the companies in your portfolio are slightly for longest time CrowdStrike and now Exxon. But we talked about Reddit, right?
Mhm.
It's not very old, right? But it's sizable for you.
No,
I was
yeah,
very
Reddit.
surprised to see that. That is a very new company, very sizable. IPO is not very old though.
No, it's not very old. And Reddit's, obviously Reddit's a message board at its core. But what they've done is they've switched to monetizing and they've become an ad platform. And we've owned Reddit, taking a look at it. I bought the first Reddit shares in November of 2024.
Hmm.
And again, another one where our cost basis is probably in the 120s. So I think it's kind of become a double for us in the 10 or 11 months. And again, some luck, I guess some skill. I did pick the company, but ultimately it did have to come through and perform. And what they've done really well is they've taken that message board with all the information they've had. And one is they have a business that allows them to sell some of their data to train language models with real information from people that are on these message boards. But the other thing they've done is they pivoted to ads, and it's very, very targeted ads. If I'm making this up, but if I'm a fishing company in Alaska, I can literally find a thread on fishing in Alaska. So I know that if I put an ad on
Hmm.
Reddit, it's reaching my target
Yeah,
audience.
yeah, yeah.
So they've done a really nice job of that, and they become an ad platform, and their numbers have really soared. And they're starting to monetize. They've in the last couple quarters, again, we know, again, it's their base of their business is in the US, but they do have international. They've increased the number of languages in just 2 quarters. They've gone from eight being available in 8 different languages to being available in 23 languages. So they have some international expansion. It's always slower. Any company that does average revenue per user, it's always US driven. Like 80 to
Yeah,
90%
yeah,
of their
yeah. Yeah,
revenue is
it's
going to come
still,
from the
yeah.
US. But they do have some international revenue that's coming in as well. They've done a really nice job of leveraging their user base to start to sell ads, and their numbers are phenomenal. And one of the things that's helped me, I owned Trade Desk for a long time.
Okay.
So
You still hold it?
I sold Trade Desk about 2 quarters ago when they had the quarter where they
Lucky
missed.
you.
Yeah. Again, I owned the trade desk for years.
Okay.
And I really trusted management. They rolled out a new platform, and then they had a miss and were like, "Oh, well, our platform didn't roll out the way we thought, and we're going to hire some new executives, and we're going to revamp our engineering teams from big slow teams to smaller agile ones to be able to customize for our customers." I'm like, "Whoa, that's not a 2 or 3 week overhaul. That's like a 2 or 3 quarter overhaul at least. I'm out." But the trade desk gave me, and I own the trade desk and Reddit at the same time, but the trade desk has given me real insight into how the advertising market works and
Okay.
the seasonality of it.
Hmm.
And it's always heavy in Q4, which is your holiday season. And then drops in Q1. And every other year in the US, there's political spend. Every 4 years, there's US political spend. I don't know how Reddit's going to do with political ads. I don't know if they'll do that or not, but I know how the advertising market generally works and how the revenues flow. And Reddit's doing all the things of a really strong advertising company. And Reddit has grown to its past Axon. It's now our biggest position. But I think it's important. I'm not really continuing to add money in it. It's doubled in 11 months. So it's just grown to be that big of it's earned that spot in our portfolio. Um, Axon's actually, in my opinion, a more fundamentally sound and stable company than Reddit because I believe Axon has that growth durability. Reddit is always going to be subject to the winds of the ad market. So if we go into a broad economic downturn and companies cut back on ad spending, that's going to affect Reddit. So while their underlying business and their ability to leverage that and their understanding of their business is clearly, at the near the top of the charts, they are at the mercy of what the ad market looks like. So there's an external factor with Reddit that doesn't exist with Axon, but Reddit's done such a good job of pivoting to this advertising model and has made and they're hitting all the checkpoints of the things that I talked about again with revenue growth, margins, profit margin, like they're doing all the things that they need to do to show that they're a top-notch company.
Well, what do you like? What are you concerned that they're too dependent on ad now?
It's not a concern, but it's something I'll keep an eye on. If and the good thing is, Meta sells ads and Google sells ads, and they usually report before Reddit. So that's one where knowing the ad market, I always want to hear Meta or Google's comments on how their ad business went before Reddit. I'm sorry, before Reddit reports. So now if I have that, like I have an idea. So really, that's one where I am keeping an eye on the ad market a little bit. And even if the ad market goes down, I do believe Reddit's a company that can come out of those kind of downturns stronger because it has such a strong business backing that. But there is some variability to that because the ad market moves on a little bit on a whim, and when especially when macro turns bad, we go into a recession or companies start pulling back. Ad spending is the first thing to go. So I saw that owning Trade Desk all that time. I know that it's coming with Reddit, but I know right now we're in a an ad market where the ad spending is still continuing, and Reddit's doing a really good job of building out and drawing more ads onto their platform. So their numbers have been really, really strong.
I think their ad, how much ad, obviously it's a macro slowdown will affect ads at some point of time. But at the same time, the nature of the platform is also very important. And I think what possibly I think they've done well is organize their communities, right? By the interests. And I think if there's a very valuable grouping because I'm in market research, I've done a lot of segmentation and like-mindedness or psychologically what do you call if you're grouped together. I think that's a very strong cult or bonding there.
Right. And I do think that's one as an advertiser, and I'm not in advertising, but I'm just thinking about having followed the business. Advertisers want to make sure that if they're paying for an ad, that it's going
The
to
right people.
the right people. It's going to the right audience. And they'll see, click-throughs or however there's
Mm,
obviously measurements of
mm,
that. Click-throughs, how many are converting to sales, all
mm,
those types of things.
mm.
And every ad company needs to show that they are hitting the targeted audience. And Reddit is making itself a prominent or maybe even preeminent space to go because their targeted numbers are really strong. And again, at the example I gave before, if I own a fishing company in Alaska and I want to make sure I'm doing it to people that travel to Alaska to fish, I can literally find a thread or a subreddit of people that fish and that travel to Alaska to fish, talking about the best places to go and where to eat and how to go and where, what are the best charter companies or whatever it might be. So if I'm in that space, Reddit is I know even before the metrics start going in, I know that I'm going to be able to find targeted audiences there. So
Mm.
it's a great place to try and maximize my ad spend. And as long as Reddit can make themselves a premium destination for companies to spend money to get targeted returns, as long as they're at the front of the end of that market, which right now they are, they should be one of the stronger plays in the space.
Yeah, I think they look like in a good direction. I don't have a penny in this company, but after I've seen your investments in Galcos, I think and Reddit is a company which can become a cult stock. It seems like it's very strong. It can have a very strong community of people who want to own the stock, and which kind of excites me as well. But again, have you taken some profits off the table or you're sitting?
A little bit with Reddit, but not a ton because I want to I want to make sure that the good companies that I own, I don't want to penalize them for being good companies.
Hmm.
So when stocks run, I've sold a little bit of Reddit, maybe 5% of our shares, but I've kept the bulk of it. And the reason for that is, again, like I've talked about what is the trend and what do I think it
Hmm.
should do. So Reddit had a really good, let me look here real quick with the what quarter they're in. I think they just did Q2. Yeah, so they had a really strong
Hmm.
Q1 and they guided for Q2. And I would thought going into it, they had guided, I can't remember, I think they maybe guided for 430.
Oh, I
Uh,
don't know the right number, but I
let me
know
see.
the results are fantastic. That's what I know.
Yeah, it was phenomenal. I'm gonna look up real quick because I want to make sure that I get the numbers right for everyone. So yeah, so they guided for $430 in revenue, $430 million in revenue in Q2.
Okay.
And I said, okay, if they stay on trend, I would expect them to do 450
Hmm.
and I would and the guide maybe around 480. 490 was what I thought. So I'm like, okay, going in, I want all the other numbers to be the same, but they guided for 430. I would expect to see 450 as the headline revenue number, and I would expect to see like a $490 million guide. Well, expected 450. They did 490. They did 500. And then I expected a 490 or 495 guide, and they guided for 545. So not only did they stay on trend, they actually bumped the trend up.
Mm.
So that's why Reddit is up, 40% or whatever it is this month, because anyone that was looking for the trend, they actually set a new trend. Now, the flip side of that is they still need to stay on trend in quarter three and they need to stay on trend in quarter four. But if you think about the trend of being a slope, when they actually make the slope steeper, which means their money might grow faster. Well, who doesn't want that? Who doesn't want companies that you think are going to grow faster or perform better than you thought? So again, they always have to maintain it. And this was a great quarter. It doesn't change the fact, again, to your kind of separating, okay, well, now I'm expecting this next quarter. They still need to meet this next quarter. And if they do, it's going to be fine. And if they don't, the market's probably going to take back a lot of the gains that they've had. If they go even steeper, Reddit probably can take another step up. But again, because I get to see Meta first, I get to see Google first. As long as they tell us that the ad market is okay, I would expect Reddit to tell us the ad market's okay. And part of the reason I sold the trade desk going back earlier was Meta told us it was okay, Reddit told us it was
Mm.
okay, Google told us it was okay, and the trade desk told us it wasn't okay. Well,
Mm.
okay, well, if everybody else is having no problem and you're having a problem, that's company specific and not it's not driven by the ad market. So that's kind of how I look at that and consider that.
But your criteria is you'll sell it the same, like 2 quarters. If it screws up, then it's out.
I usually take it to zero. Yeah, I use and I always try and go by my conviction. So if my conviction in a company drops down a tier, I'll take it to a tier. I'll take it lower. So I tend to go by tiers. If Reddit, right now it's whatever 11%. I have it in my largest tier, which is above 10%. If it dropped down a little bit, and I was like, I feel more comfortable owning like 6 to 8% of it, I would take it down to a 6 to 8% allocation.
Mm.
When it doesn't become when it's no longer one of the best companies that I can own, I just take it to zero. Like that's how I decide if I
Mm.
hold myself, I only want to own 10 or 12 companies. And I've had companies I'll just go back and for long time listeners that might remember in 2021, I had bought Upstart, company called Upstart, and
Yeah, yeah,
Upstart grew, I bought it in mostly below 200 and it ran up to 400. It,
yeah.
it was
That
like
was insane.
yeah, it was like a 30% position in our portfolio. And it had one bad quarter that, again, was so far off trend, just like I described with Sezzle or just like I described with Trade Desk. It was so far off trend. I sold it from 30% to zero. I sold every share I had in taxable account or non-taxable accounts. I kept like a 1% position or so in a taxable account because I didn't want to take the tax hit. And it kept going down, and the lesson was I should have just taken the tax hit. I'd rather pay the taxes on a bigger gain than pay taxes on a smaller gain, which is what I ended up doing, by the time I sold it because it just wasn't worth owning anymore.
But you're
So
not gonna,
it's
you're,
really holding into that standard.
are you gonna add Reddit at this price, or you don't think because it's already quite
Uh,
for you?
for me, I have not added at this price, but I already have enough of it. But then I'll go back to what I said
Yeah.
before. Now the market's pushing all-time highs, and you can do whatever you want to do. But if we have a couple red days in the market and Reddit's down 5% or 7% overall, like maybe I'd add some to get some on the board. But at the same time, it might be where I'm like, hey, you know what? Reddit's really good. It's at the front of the market. I'd like to own a little bit, and I'll just put some on the table here just to. And think for a lot of people, if you do track companies, you're focused, you get more focused when you have some skin in the game. So how that works for you in getting skin in the game, I'm not adding to Reddit here, but I don't have to because I own, I own it's our biggest position already, but I do like the company. I do want to own it, and I don't see it going anywhere in our portfolio.
So it's awesome discussion on Axon and Reddit. Joe, last question to finish the interview on broader market. How
Mhm.
are you feeling about the broader market? Is it frothy? Is it is it rich or what is it?
Yeah, well, I'm feeling like everyone else. You're starting to see signs of an overheated market.
Okay.
You got a lot of meme stocks right now. Companies are at tr historically high valuations. You're starting to see more and more comparisons to 2000 and 2020. And the reality is, I mean, there was a plummet in 2016. There was a plummet in 2018. There was a plummet in 2022,
That was
which is not
bad.
that far.
Yeah.
That was a bad one. And 2022 was the worst market, really, for most of us. It was the worst market in our
I
lifetime
remember
to
your
date.
I remember a newsletter.
Yeah,
I
because
remember. Yeah.
stocks and bonds both plummeted in 2022. So unless you were Warren Buffett and Charlie Munger and had been investing more than 60 years, it was the worst 6 months in the last 60 years of the market. So for most of us, 2020, the first 6 months of 2022 was the worst market in our entire lifetimes. Worse than 2020, worse than 2000, 2022. And we lived through it. And I think at the end of it, what I've always done is if my timeline's high enough, I know that the market returns on average, 9 or 10% a year. And I want to be in that. I believe in the long term, the market always goes up and to the right. What I've learned, and as I've gotten older, you do have to have the ability to kind of wait out the downswings.
That's
So what I always did when, especially when I was working, and I'm very fortunate now I've been able to scale back. But when I was working regularly, at the end of every month, I had X dollars to put in to stocks. I always put them into the best stocks that I wanted, regardless of whether we were at highs or at lows. So I just dollar cost averaged. And I found myself in a weird way when I knew the end of the month was coming up. I was actually rooting for the market to drop because I knew I was going to buy companies. I knew I was going to buy stocks. So, again, I think it's something. Is the market going to be higher 5 years from now or 10 years from now?
surely yes.
I would like to think so. The odds tell us yes, that it's going to happen. And if that's the case, well, you know what? I'm just going to buy now because I know it's going to be higher 5 years from now. But if it's not higher 5 months from now, I can't do anything about that. So, I totally understand the market timing thing. And when you go through, I went through 2000, I went through 2008, I went through 2020, I went through 2022. I've been through those swings and I've maybe moderated my approach a little bit. But at the same time, I trust that good companies are going to have a higher price down the road. And if they're good companies that I want to own, I want to make sure that I have at least a little bit. So
Okay.
I hope that answers the question. I
No,
know
no.
we're price sensitive, and I know it's hard to click that button to buy the stock when we're at levels like this, but I'm concerned, do I want to own this company? And if I do, I want to put at least a little bit on the board. But again, that's just me.
No, no, I get it. I get it. My thinking is not very different from here, but sometimes the fear strikes in.
Mhm.
You're afraid that it's high. Should I buy? Should I wait? Should I buy? Should I wait? But what I've noticed is whatever cash on the side you keep, you never find the optimum time to buy. I've never seen that. Either you buy before or you buy after. There is not the time to buy or use that cash.
Yep. And what I've come to do over the years, really the last couple years, is I've been more conscious about being able to moderate time swings because of my timeline, really, my family's horizon. As I've actually, like I said, when stocks have made huge jumps, I've taken just a little bit off the table. So, Astera Labs had a huge jump. I own some. I took a little bit off. I took a little bit of Reddit off. I took a little bit of Axon off. Not a lot, but enough to go, hey, you know what? Let me take a little bit of profits here. And I've done that range like 10 to 12%. Well, when it gets above 12%, I'm going to cut it down a little bit.
Yeah,
And if it dips back down, I might add those shares back. Like I said with Axon, I was really fortunate. I sold some at 800. I was able to buy it back before earnings at 720, which is a 10% discount. And then I had the same number of shares that had a great earnings report. It went up to eight. I sold some at 825 and I sold some at 850. And then, then it pulled back a little bit. I didn't buy all the shares back, but I bought a few shares back at like 760 or something like that. So again, I have my core position and I'm willing to kind of add and trim on the margins based on my conviction around the company. But it took me a long time to come up with that style. And I can't tell you it's numbers driven. It's more kind of gut driven as do we find these companies get in these price channels. And if I feel like it's at the top of the price channel, I'll cut a little bit. And if I feel like it's near the bottom of it, I might add a little bit. But ultimately, I'm always working around that same core position, that I want to stay true to the tiers that I have as to how much I want to own. I don't want to get too far away from that.
I mean, Joe, experience will always play a part. I mean, and that is intuition which you're using in the decision making and buying stocks, and you live by that. I think on
Yeah,
that note,
and I feel like where these calls are, it's about information. Like, what ideas are other people doing? Because again, investing is not a zero-sum game. Like, we can win together. It's not you win and I lose like we're playing poker. It's you have a chance to win and I have a chance to win. And if we find an idea that works for both of us that helps us, then feel free to use it. That's where these conversations are really valuable.
totally. I mean, it's like this. If you want to go from place A to place B, essentially doesn't mean there is only one way to go. There are multiple ways to go. It depends. You're riding on a motorbike or riding on a car. There are various analogies to justify that. So that's
Mhm.
what it is. And I can clearly see that your style of investing, which we discussed earlier also, is very quant driven, but there's a hell of a lot of intuition and experience baked into it to drive your buying decision, which I think is
Yeah.
is the
And
key.
I'll make it simple. I've written about this before when I was doing the newsletter as Stock Novice. I look at it almost like my conviction in the stock is a combination of the numbers, how well is it performing, executing from a number standpoint, and narrative. So conviction equals numbers plus narrative. And there are companies where the numbers are weak and the narrative strong. I don't want to own that. There's companies where the numbers are pretty good and the narrative, they're really they're out of the market doesn't like them right now. I might consider that because I think the narrative will eventually catch up to the numbers. But ultimately, I want companies where the numbers and the narrative are in a good place. And right now, like Axon, the numbers are great, the narrative's great,
Yeah.
and where it can go. With Reddit, the numbers are great, the narrative is good in the advertising market right now. But if the narrative on the advertising market turns, I know from past experience the numbers are probably going to turn a little bit too. So I'm not going to want to own as much Reddit, or maybe not want to own Reddit at all if the narrative and numbers get out of whack. So yes, it's quantitative, but it's also like I want the numbers and the narrative to both be pointing in a positive direction with the companies I own. And the stronger the numbers and narrative match up, the higher my conviction in the company.
Well said. That's such a great summary to end the interview, Joe. Appreciate
All
your
right. Well,
time. We talked quite a bit, but very useful, and I learned a lot. And once again, I'm so happy that you're back as Joe.
thank you. I really appreciate the invite. I always find these conversations, it's how we get better, is by exchanging ideas. I really
That's
appreciate the
very kind
questions
of you
and
to say that.
comments as well. And I really enjoyed it. And I hope the listeners enjoy it as well.
They
And yeah,
will.
look forward to seeing you in X or wherever I end up seeing you. So thank you again for the invite.
Take care, Joe.
All
Bye.
right.
Bye.
Thanks, Rajiv. Take
Bye.
care.
Take care. Bye.